Welcome back to the weekly option. This is your host, Eric. And in this video, I'm going to discuss the trades that were covered on the April the 9th podcast. Thank you guys so much for watching the video. And hey, if you haven't already subscribed to the weekly option YouTube channel, go ahead and hit that subscribe button. I'm adding more content to this YouTube channel. We're really going to be having some fun here soon. So wanted to start off with the covered call for this week on Cara Therapeutics. Symbol CARA, Charlie Alpha Romeo Alpha. This stock has had a strong, it's had a strong move, a strong 2021 first off, a little bit of a pullback in the second half of February, but really since the month of March, it's been grinding higher and then it just really popped. I also like that earnings already happened in this stock, so I don't have to worry about this pop actually having been based on company earnings. But if I were going to look at a trade, looking at a covered call trade, I think this one with such strong stock is a good place to start. And when I look at the option chain, I'm going to look at the option chain for May the 21st. And I like that this call option here is trading at a significant premium, right? Quite significant premium. So for this covered call position, I'd be looking at buying stock for $29.19 and selling this May $3.30 strike call at $3.20. So essentially, if this goes in the money, you'll be selling your stock at 30 cents, which means you lock in an 81-cent profit on the stock. Plus, you also get to keep this $3.20 that you've sold. So you'll actually collect in real terms $401 on an investment of $2,919, right? Because the multiplier is 100. So for options, so whenever you sell this call, the stock equivalent is 100 shares. So that means that in real terms, the stock is $2,919. All right. Let's go to our second trade on the week. We were looking at Freeport McMoran. Freeport McMoran, symbol F as in Foxtrot, C as in Charlie, X as in X-ray. Now, I am a fan of trading in line with strength, and I can just keep pulling this chart back, and you see that since the recovery, the pandemic recovery last March, this stock has been strong. It's just grinding higher, grinding higher. It had a pullback in in January, really, and then it shot significantly higher. It's pulled back twice since then, but I'm not convinced that this up move is finished in Freeport McMoran. And so the only downside here is that there is earnings. They've got an earnings report in just 2 weeks, just a couple of weeks. But we can expand. We see what happened. Their January earnings had a significant pop. They had a nice little pullback and then a pop a week later. In October earnings, you can just go back and see. That makes me less worried about their earnings. But I do think that this stock has more of a propensity to go higher than to have a full pullback right now. So if I think stock's going higher, that means I'm looking at selling a put spread for our credit spread trade. And I looked at this and I thought, this 34.33 put spread, I could actually sell that. And this is for the monthly expiration in May. I could sell that for actually 43 cents. That sounds nice, but it almost sounds a little too rich for what normally would happen for these. So I decided to go $1 lower and sell the May 33.32 put spread instead. So I'd be selling this May 33 put at 183 and buying the May 32 put. So selling the 33 put, buying the 32 put, and that's where the 38 cents for this spread would come from. So selling a $1 spread at 38 cents, and if it goes against us, my maximum loss is 62 cents. Final trade on the week is one of the ETFs that I love. It's the S&P 500 ETF. And when you want to talk about strength, this U.S. economy, the stock market has had crazy strength, and there was a period where I was looking at going ahead and selling it. Thankfully, I didn't find the trade numbers, the trade metrics that I really wanted, because this stock has had like a little pullback and it's gone higher, a little pullback, gone much higher. So I don't think that it's time yet for it to pull back or to really drop. But even if it is, that's why you play the options and have a defined risk rather than just deciding to short futures. Yeah, I know people who've done that. They normally get sent home eventually because this market can continue to run up much longer than I can remain liquid or something along those lines. So, with the market going higher, I'm looking at buying call spreads for the month of May in the spiders. Symbol SPY is the acronym. S is in Sierra, P as in Paul, or P as in Papa, actually. Y as in Yankee. And I'm going to go all the way out to the May 21st because I want the monthly option. But you can see how many expiration dates this thing has, like 3 a week. It's crazy. Those are the weekly options, by the way. On the show, I looked at buying this May 410, 411 call spread. So I'd be paying $8.21 for the 410 call, selling the 411 call at $7.53. That's where the 68 cents comes for this spread. So I'd be paying 68 cents for a $1 spread, which can get me a profit of 32 cents as long as we stay above $411. So that ultimately is it for this week's trades. Thank you guys for listening to the show. Thank you for watching this video on YouTube. Email me if you have any questions. My email, of course, is eric@theweeklyoption.com. And definitely subscribe to this channel if you haven't had a chance to already. All right, that's it. Have a great weekend. Happy trading.